Trading Market Technicals morning call video for Wednesday, February 19th. Kind of a quiet day, inside day for the last two trading days from Friday. Dow Jones down 23, Nasdaq up 28, so tech's still doing quite well. S&P up 2 and the Russell up 12. But other than that, aside from technology, it's kind of quiet. One thing that does continue to show some gains is energy. In the energy sector, which, as you all know, that I really like a lot. Now, it is a bit extended, but I'll show that to you in a USO chart. But the energy sector, as you know, seasonality strength comes in between now and May, just before the driving season happens. So I continue to like the oil and gas sector and the oil services sector. So we're going to take a look at that again, as we always do. But doing a lot of the analysis last night shows me that there may be a storm brewing, and that storm is going to be the emerging markets again. I'm going to show you a couple charts, the EM and the FXI, the China ETF. And it just looks like that they just did a quick retracement rally and now looking to head lower again. Some of the currencies, the emerging market currencies, are really starting to sell off again. So you have to watch what they're doing, and if you can watch that, it'll give you some better clues. All right, so let's just go right into the charts. It's going to be a small video today because nothing really has changed. Now we're just kind of waiting and anticipating to see what's going to happen here. Again, cautiously, I'm bullish, but I would really, if you're holding a bunch of positions, guys, I would really tighten up stops. I wouldn't be adding in here. If anything, I would be buying some protection against the portfolio. As you know, VIX is at low end, and I'll show that to you as well. So buying puts is going to be cheap again. So definitely be watching here. Now, that does not mean that we can't, explode higher and at least challenge the highs. But you have to be cautious here because there's a lot of signs when I'm doing my analysis that tells me, hey, I have to use caution and maybe reduce my share size here while we're trading. Okay, so let's go into the McClellan oscillator. Now, we are in officially overbought territory. Okay, as you can see here, we're overbought here in our stochastics, but the McClellan oscillator has now broken out of the 60, so that makes us official that we are in an overbought state in the markets. Now, obviously, the higher we push, the more probability is that we're going to come back in again. Okay, we just broke out of here, so nothing really too crazy. But once we start breaking out of the Bollinger Bands like we did here, that's going to be really a signal that now we want that signal to come back in. And once we come back in, that's when the markets, we get a sell signal in the market. So we'll just keep an eye on this closely today to see what's happening. Now, the VIX, take a look at the VIX. VIX, not quite at the lows, but, we're down here around the 12 area. This ended up closing right around about 1387 on the close. So we're right around the low of the 2013 low. So, could now start to move up. If we start to retrace back up again, got to be careful, because once that does happen and we get back above that 200-day moving average, we can easily start to trek higher again. Okay, so let's keep an eye on that VIX. Now, the two that I'm watching is the EM, the emerging markets. As you can see, yesterday we actually sold back off again, and to me, this is just like one big bear flag, and it's coming into the 50 underneath the 200. So definitely want to watch this. I'm going to be keeping a close eye on the emerging markets, especially the currencies, and I'm going to see what happens in the coming sessions. But I do see something brewing here, guys, and it may be bigger than expected. Nothing might happen, but we need to really keep our palates dry here. At least, even if we're uncomfortable, even if you step aside for a day or two and just to see where the markets go, I think that's a safe bet. China, same thing. Right underneath the 200, we have a horizontal area of resistance, so we got a lot of resistance up above. And then we get a black candle, which tells me sometimes the black candles tell you that it's reversal time, as you can see here and here. So maybe we start to move back lower again. So it would be interesting to see what happens in the coming days with these two ETFs, okay? So definitely keep an eye on them. All right, let's go right into this the chart segment. The most disturbing for me is going to be the transportation sector. Now, obviously, oil is breaking out, so sure, it does affect that a little bit. But the transports are showing relative weakness to what the market's telling us here, and that's what I'm going to show you next. Now, we do have the E-mini S&P. We're down about 4.25 handles. Nothing really too crazy, but again, a little bit of pre-market weakness at the moment. And as you can see here, these two candles, we have inside day from Thursday and Friday, so really no movement in the markets, at least in the indices. You know, individual stocks are really moving instead of the indices at the moment. And we are at these upper ends of this resistance area from the high of 146.50. So we're just chopping around here. Nothing wrong with it. It's just that, as you can see, we're in an overbought state at the moment, and we have no volume. We have diminishing volume. So to me, that's a concern, or at least a red flag. Doesn't mean that we've got short the market. That means that you either buy protection and you just buy good quality stocks on pullbacks. Here's the hourly chart, and this is what I'm going to be really watching here. Okay, 1732 low, as you can see here. Now we have all of our averages and has bullish symmetry, as you can see, all chugging along higher. Now it looks like we're starting to curl here. Now let me just open this up a little bit, okay, and bring this down. So here is what I'm going to be looking for, and this is what I want to see. I want to see we starting to break lower. We have the 8 and 20 already crossed. Now the 20 is crossing over the 34, and then of course here we got the 50. Okay, so if we could start breaking lower, then to me this is going to be a sign that we're going to take out this area here. And as you can see here, 1832 is really. Let me just get trend line. And as you can see here, 1832 has been holding for the last couple of sessions, right? Even actually back in here. Let me just extend that to the left. So 1832 is holding. We break that 1832, we can get a good flush to 1820. And that's what I'm going to be watching today. Those are going to be the levels, 1832.50 in the ES. Okay? And it's going to be on the hourly chart. Let's take a look at the SPY. Now, again, to me, just a little bit of a back test. Bonds didn't really move anywhere the last couple of days as well, but it's holding up at the upper end of the range, and gold is breaking out. To me, another red flag for me. So if we see bonds start to really tick higher, gold holds these levels, and we get a rollover in the S&P, emerging markets break down, and some of our key indices start to break down, that's going to be a red flag. Got to use caution here, okay? S&P Weekly, just want to show you that we are, the longer-term picture looks great. The stocks look great in the long term, but we want to see really how in the near term, and I mean in the next couple of weeks, how stocks fare. And again, we have some red flags. Doesn't mean that we go out and short the market, but we need to really be cautious here. Okay, as you can see here, S&P really didn't do too much the last couple of days. Diminishing volume. We're in an overbought state. So it's going to need to really start to break out of this range, or I see at least a test of the lower end of that channel in the SPY. And then, of course, we would reevaluate it. Here's the transports now in the IYT ETF. Not looking too pretty. I mean, we have another distribution day. Transports lagged all day, aside from obviously the IWM and the Qs. But this is a concern to me. This is our leader, and it's not leading. And that's something that either it plays catch-up or it takes the other indices down. Now, the Russell did very well yesterday, as you can see. Really exploded higher. And really, what is it doing? It's just really back-testing the bearish rising wedge, right? Right? See, I mean, this really technically is still on a sell signal on this bearish rising wedge. Now, if you open that up, you'll see we back tested the upper end of this channel. Now, today, it's going to need to get back underneath that, above that bearish rising wedge to alleviate any downside pressure. Otherwise, if we take out yesterday's low in the Russell of 114, then I think you're going to have a deeper downside here, move to at least challenge the lows here. And that this I would call this pivotal. A pivotal low, and that's what we're going to be watching. Okay, and then we have the Qs. See, technology did well. So the Qs and Russell really led the market yesterday. I think one of the laggards in the Dow was Coca-Cola, so that actually turned that index lower. You can see that in the diamonds. But and it's lagging as well. I mean, it is above the 50-day moving average, but you can see here it's kind of lagging. So I'm not too excited about the performance of these of the markets at the moment, and that's something that, if you are uncertain, and that's why I say cash is a position, no question about it. And then you stomp, and you really get aggressive when you feel that everything is coming together. Now, we're just underneath that 200-day moving average in the GLD. Great call, right? We had a great call in gold, if you follow that, and you could see it. That downtrend line broke right down, and then now we challenged it high. So you either should be out, or you should be trailing your stops. And here is the XOP. And as you remember, I'm showing you this as an educational purpose as well as trade ideas. You can see when you see a breakout above the 50, and I mentioned that, you can dial into this ETF and look at the top 10 holdings and find the best 2 or 3 stocks, and you can trade that. Okay, and that's what's happened here in the XOP. Same thing with the XLE. Now remember, this is still on a sell signal, but the I do like the XLE, and I like the stocks in the ETF, and also the OIH, which is the oil services. Don't have that here at the moment, but you can look at that as well and dial into that and try to find some of the best stocks. I do like Schlumberger, Baker Hughes, and Halliburton as the three oil and gas service providers, and the charts look phenomenal on them. Obviously, we don't want to chase. You want to be looking for pullbacks. And here is the USO. As you can see here, we broke out of this area, and now we continue to move higher. And really, the target's going to be right around this area, $37.5, $38. But again, coming off of a big, long move, as commodity, if you don't follow commodities or trade commodities, they can revert back rather quickly. So tighten up stops, trail, or take half off, take some profits. Okay, in the USO. But so far, another great trade we had in the USO, and I noticed a lot of people did take some of that. Now we had home building sentiment was the worst in years. They had came out yesterday, but what happens? Came in and they bid it right up. Look at the bottoming tail. So on any weakness, and I don't mean just for a day, guys. I want weakness, meaning I would love to see this come into the 50-day moving average in the ITB, this home construction. This is what I like to see. Something coming in here and then starting to push higher. Same thing with XHB. See, we had weakness, and then again, we moved higher again. So this sector is being bought on any weakness, and that's what you should be doing as well. I like to see at least 2 or 3 days down instead of just 1 day. I'm not going to just look to buy it on 1 day down. But again, I'm watching this closely here. Lennar, Pulte Homes, another one of my favorites. And then, of course, KBH here, which hasn't gone yet. And when this sector does get bid up, KBH will move and really start to explode here because it is building energy and basin for many, many months here. So that's something that really you should be looking at. Banks, not too crazy at the moment. I like to see another higher low from this pivotal low. Take a higher low here, maybe base, and then start to break out again. Some of them, like Citibank, really didn't do anything yesterday, but it is holding above the 200. Now, this could go either way. I would not be buying Citibank at the moment. If you are long it, just hold on to it. I wouldn't add. I would be looking anything above the 50-day moving average. All right, and that needs to base like it's been doing, and then look for a rally of new highs. JP Morgan, obviously the better of the bunch. Looking pretty good, constructive. I'd like to see another pullback, maybe a bull flag into the 50, and make that higher low from this previous low. And then you can see Goldman Sachs here again, weak, not really doing too much. But remember, watch the banks because they just they come and they just explode higher. So just kind of watch them and see what they do. And then lastly is Apple. Now Apple was up yesterday a few bucks, and now it's extended, right? I mean, we coming off of 490, you're up about 60 points. I wouldn't be chasing Apple here. I'd wait for the next pullback, make that higher low from here, and then start to excel higher. All right, guys, small video, but I just wanted to kind of just use caution here in the next couple of days. We are coming to challenging the highs, and of course we are starting to be in an overbought state. Not that it's a sell signal, but you definitely want to be tightening up or trailing stops here, okay? We'll see you tomorrow. Keep an eye on those EEM and the China ETF, the FXI, for additional clues because I do think that we might be coming into some selling pressure here in the coming sessions. Have a great day. We'll speak to you tomorrow. Take care.